Our lesson for today is on PAS 29, reporting in hyperinflationary economy. So the flow of the topics for this lesson will talk about hyperinflation and then the core principle of PAS 29, distinction between monetary and non-monetary items. Then we have the purchasing power of money and the restatement of financial statements due to the hyperinflationary nga economy. So first is we have hyperinflation. So in relation to the hyperinflation, before we go to that term, so we need to understand the basic assumption in accounting. So we have the stable monetary assumption. If you can recall, diba, this is one of the assumptions. So in the stable monetary assumption, the purchasing power of money is assumed to be stable. So dili na to i-consider ang mga inflation when we are recording the amounts in the financial statements. Therefore, the inflation will be ignored, but there is an exception to that if there is hyperinflation. So if it's an ordinary lang inflation or regular or ano lang na siya, usual inflation, dili na to kinahanglan nga i-adjust ang ato ang mga amounts sa financial statements. But if there is hyperinflation, that would be a different case. So we also have this term general price index. So this is the index number that is used for restating the financial statement if there is hyperinflationary economy. It is constructed by the government like the Bangko Sentral ng Pilipinas. It is designed to show how much the overall level of prices in the economy has changed over time. So if there are price level changes, there is a corresponding effect of the price level change with the purchasing power of money. So these two factors will help us determine if what is our situation in the country, if there is inflation or there is inflation. So the general price level, which is determined using the price index, and the purchasing power of money has inverse relationship. So when we mean inverse, so opposite. So if the one factor goes up, the other factor goes down. Or if the factor goes down, the other one will go up. So the general price index, when it goes up or when the price index increases, the purchasing power of money decreases. So general price index increases, the purchasing power of money decreases. And this is the inflation nga scenario. So why is there an inflation? Mudako ang iyahang price index, but the capacity of that money to buy goods and services, ang yung power para mupalit would be lesser. So that's the case of inflation. If we go to the opposite nga situation where the general price index goes down, the purchasing power of money goes up. And in this situation, it's called as deflation. So inflation happens kung mahal na ang pamaliton, nagsaka na ang prices sa goods pero gamay lang taog mapalit. Opposite is when the general price index or ang prices will go down, mas daghan tao kayang mapalit. So for example, you have 100 pesos and then if the price of the rice will go up from 50, it will become 60 per kilo. So, what will happen to the units or sa kayang mapalit sa atong 100 pesos? So, kung before, if 50 pesos ang kilos sa bugas, we can buy 2 kilos for our money nga 100 pesos. But if the prices go up, how much na lang ang kayang mapalit sa ato ang 100 pesos? So, if 60 na ang kilo, so we can only buy 1 and 3/4 1 and 3/4 na lang ang kayang mapalit. So, muubos ang iyang purchasing power. Then we have the term hyperinflation. So this occurs when inflation is very high. So PS29 does not establish, however, the absolute rate at which hyperinflation is deemed to arise. So wala siya gihatag nga range or even an exact percentage to tell us if it's already hyperinflation or not. But although wala sila mohatag og exact or absolute rate, but there are also indicators. So therefore, hyperinflation is a matter of judgment. So what are indicators of hyperinflation? We have general population prefers to keep its wealth in non-monetary assets or in a relatively stable foreign currency. Amounts of local currency held are immediately invested to maintain purchasing power. So people tend to keep their wealth or ilahang mas mo prefer sila og mga non-monetary assets katong mga dili monetary, dili siya in the form of cash or collectible in cash. Second is the general population regards monetary amounts not in terms of the local currency but in terms of a relatively stable foreign currency, and the prices may be quoted in that currency. So if this happens, there is hyperinflation. Sales and purchases on credit take place at prices that compensate for the expected loss of purchasing power during the current period, even if the period is short. Then, interest rates, wages, and prices are linked to a price index, and the cumulative inflation rate over 3 years is approaching or exceeds 100%. So, if these factors or these scenarios happen, these may indicate that there's already hyperinflation. Again, although PAS 29 set out the characteristics that may indicate hyperinflationary economy, it also states that judgment may be used in determining whether restatement of financial statements is required. So what is PAS 20 all about? PAS 29 all about? So it's about financial reporting in hyperinflationary economy. So the financial statements of an entity whose functional currency is the currency of a hyperinflationary economy shall be stated in terms of the measuring unit current at the end of the reporting period. The comparative information for the previous period shall also be stated in terms of the measuring unit current at the end of the reporting period. Presentation of information as a supplement to unrestated financial statements is not permitted. Then separate presentation of the financial statement before restatement is discouraged. Then we have the constant peso accounting. This is the restatement of conventional or historical financial statements in terms of the current purchasing power of the peso through the use of an index number. This is also known as the purchasing power or the price level accounting. So the traditional concept of preparing financial statements based on historical cost is known as the nominal peso accounting. And if we're going to restate the conventional or historical financial statements, then into the current purchasing power, that's called as the constant peso accounting. Then it was mentioned earlier that one of the indicators of hyperinflation is when people prefer to keep their wealth in non-monetary assets. So let's identify which are the monetary and non-monetary assets and liabilities. First, we have the monetary items. So money that is held and assets and liabilities to be received or paid in fixed or determinable amount of money. So the monetary items include assets and liabilities. Its essential feature is the right to receive or an obligation to deliver a fixed or determinable amount of money. That's why it is called as a monetary item. We have the right to receive and we have the liability or the obligation to deliver in terms of money. In simple terms, monetary items refer to cash and assets that represent a fixed amount of pesos to be received or obligations that represent a fixed amount of pesos to be paid. So what are examples of monetary assets? These can be cash and cash equivalents, accounts receivable and their related allowances, loans and notes receivable, financial assets that amortize costs, finance lease receivables, advances to employee, prepaid interest, long-term receivables, special deposits which are recoverable, pension, sinking, and other fund consisting of bonds at amortized cost, and we have cash surrender value. For monetary liabilities, we have financial liabilities at amortized cost, accrued expenses payable in fixed and determinable amounts of money, dividends payable, refundable deposits, for example, security deposits on leases to be returned to tenants at the end of the lease term and deposits for returnable containers, accrued losses on firm purchase commitments, pension benefits to be paid in cash, and provisions that are to be settled in cash. Was anything wherein there is an obligation to deliver money, fixed and determinable amount of money. All other items that cannot be classified as monetary items are non-monetary items except of retained earnings. So the retained earnings will be a balancing figure after restatement. Meanwhile, let's go to the non-monetary items. So it's obvious that those which are not classified as monetary items will be classified as non-monetary items. So their peso amounts reported in the financial statements differ from the amounts that are ultimately realizable or payable. So the essential feature of this one is the absence of the right to receive an obligation to deliver fixed or determinable amount of money. Okay, the right to receive and obligation to deliver. So examples of non-monetary assets, of course, katong wala na belong sa items nga monetary ganiha, they are non-monetary assets. So examples, specific examples would be physical assets such as inventories, PPE, investment properties and their related accumulated depreciation. We have intangible assets, financial assets measured at fair value. Remember ganiha, katong maapel sa monetary assets kay katong measured at amortized cost. So examples of this one is held for trading and through other comprehensive income, advances and prepayments not collectible in cash, such as advances to suppliers. Because if we have advances to suppliers, we are entitled to receive the goods that we ordered or services ba na siya nga we purchase. So, dili money atong ma-receive. Prepaid insurance, because once the insurance will expire, it will not become money, it becomes an expense. Then, prepaid rent. The same with the prepaid insurance, once this expires, it becomes an expense and we're not entitled for a monetary nga amount. Then we have pension, sinking, and other fund consisting of financial assets at fair value, and we have goodwill. For non-monetary liabilities, we have financial liabilities measured at fair value, unearned items not payable in cash, such as advances from customers, because we're obligated to provide the service or provide the products kung realize na advances from customers. So these are unearned income. Then unearned rent. Okay, the unearned rent becomes income and it does not become a payment of cash. Dili man siya mahimong payment of cash, but it will become income pag ma-perform na ang or na-provide na ang service, which is ang provision of the rental nga service. deferred revenues, and the like. Warranty obligations to be settled by future delivery of services or replacement with other non-monetary items such as free repair service, free replacement of parts, or replacement of the good purchase. Wala may gihatag nga money. Non-controlling interest, and we have equity items such as ordinary share capital, preference share capital, share premium. There are also non-monetary items that are carried at other than cost. So as a general guide, only non-monetary items measured at cost are restated. The following non-monetary items need not be restated. So non-monetary items measured at net realizable value or fair value as at the end of the reporting period. Non-monetary items measured at revalued amounts as at the end of the reporting period. So if the net realizable value, fair value, or revalued amount is determined at date other than the end of the reporting period, the non-monetary item is nevertheless restated. But the above items that are mentioned, they are not restated if the conditions are met. Then we have the purchasing power of money. So this was mentioned in the introduction, diba, in relation to the price index. So the purchasing power of money means that these are the goods and services that your money can buy. So in times of inflation, okay, or rising of prices, so there is a purchasing power loss for the monetary assets, and there is purchasing power gain on the monetary liabilities. So opposite nga scenario, if there's deflation, so there is a purchasing power gain on the monetary assets and purchasing power loss on monetary liabilities. So what is this purchasing power gain or loss? So we have to compute that, so we have the net monetary items. So that is monetary assets minus your monetary liabilities at historical amount. So we deduct from that the net monetary items and using the restated nga amount. So again, net monetary items is the difference between the monetary assets and the monetary liabilities. And we're going to value it at historical cost and also at restated amounts. And we get the difference, that would be the gain or loss on monetary position. So the gain or loss on the net monetary position, also called as the purchasing power gain or loss, is recognized in the profit or loss. So example for purchasing power of money. So we have a person deposits 100,000 in savings account at the beginning of the current year to earn 8% interest. 5 years later, having withdrawn neither the principal nor the interest, the depositor owns a passbook that shows a balance of 146,930 because the depositor now has more pesos than before. So of course, motubo man pod ang kwarta, so ni-increase siya from 100,000 to 146,930. So this is the amount that is computed, okay? For this is the amount that computed using 8% for 5 years. But economically speaking, is there a gain or loss here? Naa ba siya gain or loss? So there is a monetary income of 46,930, which is the difference between the 100,000 nga principal and the 146,930, which is the amount after 5 years at 8% compounded nga annually. So, kung pangutan-on, naabatay gain or naabatay loss, considering from 100,000, nahimo na siyang 146,930. If during the 5-year period, the price level approximately increased 100%, Then, to maintain the purchasing power of the 100,000 in the current year, the depositor should have 200,000 after 5 years. But the depositor has only 146,930, thus there is an economic loss of 53,070. Clearly, when prices increase, the value of the money decreases. Another example, a person borrows at the beginning of the current year 100,000 payable after 5 years at 7% compounded annually. The table of amounts shows that the value of the 100,000 after 5 years at 7% compounded annually is 140,260. So in terms of nominal value, hingsaka siya by 40,260 inclusive of the compounded interest. So this is the amount that should be paid by the debtor after 5 years. If during the 5-year period the price level increased approximately by 100%, then the creditor should receive at least 200,000. So kung ang prices will rise at 100%, so dapat ma-times 2 siya to maintain the purchasing power of 100,000 in the current year, but the creditor will receive only 140,260. So is there a gain or loss in this case? So na ay loss because supposed to be 200,000 niyang ma-receive, but ang ma-receive lang niya in actual would be 140,260. So there's an economic loss in the amount of 59,740. Clearly, when prices increase, it is more advantageous to incur fixed obligation rather than hold monetary assets. Then we have the restatement of financial statements. So how do we restate the financial statements? If it is in these are the items found in the statement of financial position, only the non-monetary items, the statement of financial position amounts not already expressed in terms of measuring unit current at the end of the reporting period are restated when using the constant peso accounting. The monetary items, on the other hand, are not restated because they are already expressed in terms of the monetary unit current at the end of the reporting period. In the statement of profit or loss or statement of comprehensive income, all items in the statement of profit or loss and other comprehensive income are restated. So they are the application would be or the restatement of the income statement items. So we apply the change in the general price index from the dates when the items of income and expenses were initially recorded. Only non-monetary items are restated when preparing constant peso financial statements. The objective of the constant peso accounting is to report elements of the financial statements in terms of pesos that have the same purchasing power. So the formula would be historical cost times the index as of the end of the reporting period, or it's called as the current price index, over the index as of the acquisition date, or also called as the historical price index. When it is impracticable to determine the historical price indices, such as for transactions recurring very frequently, the average general price index for the period may be used. Example, a land was acquired on January 1, 2020 for 500,000 when the index number is 125. If the land is to be restated on December 31, 2021, when the index number is 300, the restatement amount to be computed as follows. So again, we apply the formula. So we have the historical cost is 500,000 times the current price index, which is 300, over the historical price index, which is 125. So silbing i-convert nimo si 500,000 to what should have been its price now. Kay kani siya historical man ni siya so karaan na ni kaayo. Di ba pag karaan na kaayo ang property, mag-expect nga barato siya sa una, especially if land. Pero karon umangutan na ta, is it still 500,000? Perhaps dili na siya. That's why we need to use the price index to convert it to the current niya nga value. So the 500,000, if we consider the price index, it would be 1,200,000 today. So what are the procedures for restatement? First, items in the financial statements are classified as monetary and non-monetary. Remember that only the monetary items, only the non-monetary items are restated because the monetary items are not restated. That's why we need to segregate the monetary and the non-monetary items because only the non-monetary items are restated. And how do we restate that? We apply the general price index from the date of acquisition to the end of the reporting period. And we use the formula that was presented a while ago. Non-monetary items that are carried at amounts current at the end of the reporting period, such as net realizable value and fair value, these are no longer restated. Again, provided that they are already reported at net realizable and fair value. So, di na needed nga i-convert. Non-monetary items carried at amounts current at date other than acquisition date. For example, PPE, these are revalued and this would be the carrying amounts are restated from the date of the revaluation. All income statement items are restated by applying the change in the general price index from the dates when the items of income and expenses were initially recorded. But for practical purposes, the average index may be used. The general purchasing power gain or loss would be computed on monetary items and included in the profit or loss. So the general purchasing power gain or loss computed on monetary items and included in the profit or loss. Diba, we already computed that one also in the previous nga slide. So, to determine the purchasing power gain or loss. Restated amount of PPE, goodwill, and other intangible asset are reduced when it exceeds the recoverable amount. Previously recognized revaluation surplus will be eliminated. Then retained earnings would be the balancing figure. When comparative statements are prepared, the monetary items of the preceding year are expressed in terms of the index number at the end of the current year. So the next slide would be the application of the theory. So for example, this is the first problem in the book. So that's 29-1. So that's for Gardenia Company. So it reported the following assets in the statement of financial position. So we have the cash in bank, accounts receivable, inventory, financial asset at fair value, patent, loans to employees, advances to suppliers, and then prepaid expenses. So in preparing the financial statements in a hyperinflationary economy, what total amount should be classified as monetary assets? So the answer would be, the first would be cash in bank. Remember, monetary assets, they are receivable or they would be collected as fixed and determinable amounts of money. Of course, cash in bank is money itself. Another item would be accounts receivable, and we have the loans to employees. So the total monetary assets would be 6,200,000. Of course, those that which are not classified as monetary assets, here they are classified as non-monetary items or specifically non-monetary assets. Problem number 2. Sunflower Company reported the following liabilities in the statement of financial position. We have the accounts payable, accrued expenses, bonds payable, finance lease liability, unearned revenue, advances from customers, estimated warranty liability, and deferred tax liability. So which of the above items in will be classified as monetary liabilities in a hyperinflationary economy? So which items will be included? First, we need to identify which are the items that will be payable in fixed and determinable amounts of money. So of course, the accounts payable. Okay? We have the accrued expenses. Sintahay bayad sa kuryente. Bayad ba siya og interest, utilities, bonds payable. Then we have the finance lease liability. So the other items here, kaning unearned revenue, kung um, kung kani siya i-reclassify nato siya or i-eliminate nato siya, so kung mawa ang unearned revenue, it becomes revenue. If it's an advances from customers, so we provided already the service, it becomes income, kay unearned man po ni siya. Then we have estimated warranty liability. So once we um, service or provide service for warranty, so mahimo na siyang ma-convert na siya into expense. The same with the deferred tax liability. So the rest are non-monetary liabilities. So the total monetary liabilities is 8,500,000. And again, the rest are non-monetary liabilities. Problem 3, Vera News Company provided the following information. We have PPE, inventory, cash, share capital, non-current liabilities, current liabilities, and retained earnings. So the index numbers on December 31 are as follows. You have 2016 to 2020. We have 100, 130, 150, 240, and 300. The PPE were purchased on December 31, 2018. The non-current liabilities were loans raised on December 31, 2019. Question number 1, what is the amount of total assets after restatement? So to restate, first is we get the assets, okay? Assets, we have to identify, of course, which are monetary and which are non-monetary assets, because only the non-monetary assets are going to be restated. That's why here, as you can observe, the monetary asset is already placed here the same amount because it is no longer restated. So, same lang. Katong non-monetary assets, mo to siya i-restate using the price index. So, the PPE, as mentioned there, it was purchased on uh, December 31, 2018. That's why we use the following fraction. So, for PPE, we use, di ba, dapat current na price index over the historical price index. And the current price index is 300. That's why it's our numerator. And then the historical price index is the price index during the time the PPE was purchased, which is 2018. So that's why 150 ang gibutang. Okay, so we have 150. So 300 divided by 150. So 900,000 times 300 divided by 150. So that would be 1,800,000. Next, for the inventory. So for the inventory, since we do not know what is the exact date or exact time this inventory was purchased, so we're going to use the average index number as denominator. Again, we follow the same formula, historical cost times the current price index over the historical price index, but instead of historical price index, we use the average index number. And how do we get the average index number? So we get the index number for the current year, which is 300, and the price index at the beginning of the year or last year, that would be 240. So sum it up and divide it by 2. So the answer would be 270. So 2,700,000 times 300 divided by 270, that would be 3 million. So the restated amount of total assets is 5,150,000. Second question, what is the amount of liabilities after restatement for hyperinflation? Okay, so the answer would be 1,200,000. Okay, so since it did not identify specifically what are the items that are monetary and non-monetary, so we can safely assume that these items here are mga monetary items. That's why we will use the same amounts, 500 plus 700. That's total of 1,200,000. Then we have question number 3. What is the balance of retained earnings after adjusting for hyperinflation? So that would be the difference between the total assets and the total liabilities. And then we add the shareholders' equity. So share capital as restated. So we have, okay, sorry. So originally there is a ano ni siya line ani. So the total assets is 5,150,000, and then the total liabilities as computed in number 2, remember, is 1,200,000. So the total shareholders equity is 3,950,000. So that is siya line. Then we compute the share capital as restated. So how do we restate the share capital? So that would be 400,000, okay, times 300 over 100. Remember this one? This is our share capital. And we multiply the current price index 300 over the historical price index. And how do we know, ma'am, nga 100 na siya? Because the shares were issued in 2016. So that's 2016, the price index is 100. So we have 400,000 times 300 over 100, so that's 1,200,000. Again, that would be the difference between 3,950,000 and we have 1,200,000. So the answer is 2,750,000. Again, there's a line here to get the difference between the total assets and the total liabilities. So, dili na siya sumpay ha. So, ani ra magsugod? 3,950,000, then minus 1,200,000. So, that would be 3,950,000. It's not that it is added to 5,150,000. So, this is the difference between total liabilities and total assets. That's 3,950,000. Then, we computed the share capital. So, the remainder would be the retained earnings. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.